Hopefully everyone is having an amazing morning, afternoon, or evening, depending on wherever you're tuning in the world. My name is EQ. Welcome to Alchemy Meta. I'm here to help you become a better crypto trader overall. And in today's video, we're going to be going over the Bitcoin chart and something we've been talking about for the last few months. But before we get into the video, if you could take a second to throw a like on the video, subscribe to our YouTube channel, go check out the Alchemy Trading Group. Any of that would be greatly appreciated. Even if you want to get access to these Lux Algo Premium indicators, use our referral code AlchemyMeta at checkout, and you'll be able to get access to exclusive rewards as well. The time has finally come. We've been impatiently waiting for the Bitcoin chart to finally test this downtrending resistance that we've been watching for the last few months. I posted a lot of videos about this. So if this is your first time hearing about this, I would highly suggest go following me here on Twitter, on TikTok, on all the social media channels. I'm everywhere. Because you'll notice that the last few times that we've tested this zone, including the all-time high, we've had massive sell-offs. Now, we've been moving sideways since June, impatiently waiting for this to get up and test the zone. And we're finally getting to the point now where we're testing on the 3-day. We're finally seeing the potential of testing and breaking, but at the same time, we're seeing a lot of weakness and bearish trends in the market. Now, right off the bat, we are at the range low. So that is a good thing to see based on price action. We are at the range low. So if this did want to explode from here, that'd be a good thing to see. But at the same time, if this floor breaks, this could bleed very fast because there is no floor from this point. So we could easily see price break. So let's say hypothetically we did break under 17K. We could easily see this slip down to the 13 to 12K range like that. And vice versa. If this is able to break this major downtrending resistance, which we haven't broken in almost a year, that's going to cause a lot of impulse price action, and this could theoretically cause price to take a nice little impulse move into the 30K range, almost all the way up to around 33K if it really wanted to and was fully overbought and exhausted. And again, it could even go higher than that if the market wanted to, but we are in a bear market, so don't eat too much hopium. We got to stay pretty base and pretty level-headed. That's a key component to being a good trader, is understanding both sides of the trade, understanding you're not going to always win, and that you don't know what's going to happen. So you want to have the best potential and probability for success, and you also want to mitigate and take away the majority of your risk so you're not losing your bags or tilting or doing any of those things. And as we continue to zoom in, we are seeing an increase of volume, but we are still under the zero on the VFI. We have yet to see any really institutional volume come in, and we can see based on the Lux Algo trend reader, your trend strength is very low, your volatility is low, your explosivity is low, and your volume sentiment is at a minus 10%. So all this taken in consideration, your volume profile and your trend profile is not looking very strong for the bulls. Ideally, we would want to see this volume flow over the zero VFI. That would be considered bullish. But that, again, that doesn't mean that this isn't going to break. This is just saying that probability wise and what we're seeing, there's a lot more bearish trends. So if you're using a 60-40 theory like we do in our trading group, I would be leaning 60% bear, 40% bull in this scenario. And you can even see when we get in on a lower time frame, like on the daily, we're seeing this other downtrending resistance that's played out 1, 2, 3, and now for the 4th time. We're intersecting right here. I like to call these areas Bermuda's Triangle. So this is going to be a critical downtrending resistance because this is the meeting point of two major downtrending resistances. One from a 3-day and weekly perspective, really from a yearly perspective, and one on the daily chart perspective. So basically from the last few months, we've been seeing this major downtrending resistance play into effect as well. And when we zoom in a little bit more on the 4-hour, we are looking decently bullish on the 4-hour, like as if we could want it to take one more potential push and theoretically try to break this area. We can see on the 4-hour in the lower time frames, we're starting to see a little more green. Your trend strength is pretty strong. Your Lux volatility is starting to pick up on moderate. Your explosivity is picking up. So these are all really good things to see. We're also holding on a bullish crossover right now. We can see the Nadaraya, and your Spooky is also showing a buy signal as well. And you have plenty of room on your MACD, your RSI, and your KDJ to run on the 4-hour. So if this wanted to make a short-term move, for example, and retest this range higher, let's say get up to around the 20.5K range, that would be very possible. We've seen it happen multiple times historically. So it's not like something that couldn't happen. And we've also seen this push all the way up to around 22.5. So theoretically, that could be another explosive move where we see a true overbought on a shorter time frame if we were to break this downtrending resistance. But again, your volume needs to hold. You're testing the zero VFI, you want to hold here. If this breaks and continues down, that's a very bearish thing to see, and that's when you would want to potentially be looking to add shorts, take profits, shave profits, or whatever it may be, depending on your situation and wherever you're at in your trading experience and your trade itself. And even on the hourly, we tested this major downtrending resistance, immediately sold off. We fell into a bearish formation. We have a bearish crossover right here. We do have a little bit of institutional volume, but I would say at this point it's probably volume leaving because you're getting relatively overbought on the KDJ and you're still really not seeing price action break or volume break over the 0 VFI on the hourly, which is not the best thing to see. Going down to the 30-minute, you can see this is dropping too. We do have a bullish crossover, but the volume's out. There is some institutional candles, and there is a regular bullish divergence that's showing up in the RSI right now, but besides those factors, again, that could mean a quick little impulse move back up to 19 or 20K range and retest this major downtrending resistance. But when we're looking at this from a long-term perspective, these are the VFIs and the volumes that we really want to watch for. So the longer the time frame, the more respectable these numbers will be and these ranges will be. So for example, if you see a pattern building on a 3-day chart, this is going to be more prominent, has a higher probability of breaking versus seeing a pattern on a 5-minute chart. So at the moment, we're going to keep watching this and we're going to see what price wants to do and how price starts to react as we continue to test this major downtrending resistance. If you are a new trader in the space, this is a very difficult time to be getting in and out of trades because the volatility will become extremely high once we start to test this downtrending resistance a little bit more. And then we start to teeter on the SR flip, trying to figure out if it's going to be a support or a resistance moving forward. So just be wary and be diligent and understand that we are still in a bear market. So the possibility of this slipping down is almost as high as the probability of this breaking out at this exact moment because we are testing this downtrending resistance. But historically speaking, the last 2 times that we've tested this, we've dumped. So if history wants to repeat itself, it will dump. If history wants to break the trend, it will pump. Hopefully this helps everyone. If you found anything useful in this video, make sure to throw a like on the video, subscribe to the YouTube channel, go check out the Alchemy Trading Group if you want to come trade with me. If you want to get access to these pattern detectors and all of these range readers and higher highs and lower highs and your volume sentiments and the premium overlays and oscillators, make sure to go check out luxalgo.com. These are going to be their premium overlays and oscillators. So Lux Algo Premium, and your Patterns Premium. These are going to be the real deal, and I use these on top of our strategies as well. These work great hand in hand, and I have a couple of videos where I use some of these institutional readers in comparison and in confluence with the VFI to really understand if volume is flowing in or out. Because if you know anything about me, I love to trade volume and I love to trade divergences. So I use those 2 things together to really find the best swing and potential explosive plays. And I will catch you all in the next video. Thank you so much for being here, and I appreciate all of you.